banking sector in Pakistan is navigating a cautiously optimistic approach, bolstered by expected improvement in economic growth and credit appetite due to inevitable IMF support and anticipated policy rate cuts. The sector recorded a 32% growth in net assets, fueled by robust financial health. However, I must admit that I'm not happy and in fact somewhat embarrassed to report that the outstanding SME financing merely grew by 0.4%, even though they represent 40% of Pakistan's GDP. There are multiple reasons for the lack of growth in SME financing, but access to credit seems to be the big one. Banks estimated to lend less than 2% of total SME. I know somebody can dispute that because the stated number is 4.5 million, but that number is pretty old. That's 2005 or 2009 number. That, in our opinion, that number has gone up substantially up, if not more than doubled. That's why I think that we are merely servicing 2% of the total SME, highlighting an urgent need for more tailor-made products using technology and employing tools like digital scorecards based on proxy data. The readiness to adopt digital financial services in Pakistan is mixed. Financial literacy and ability to send or receive a text message are the lowest indicators, while basic numeracy and availability of necessary ID are the highest. Gender gaps exist across all indicators with significant disparity in financial literacy and SIM ownership. Mobile money wallets, however, increased from 9% in 2020 to 19% in 2022, with the urban areas seeing sharper increases from 11% to 26%, especially offering an opportunity for SMEs to take the advantage of this development of embracing digitization. The good news, ladies and gentlemen, is that the digital adoption profoundly enhanced financial inclusion in Pakistan by introducing path-breaking initiatives like State Bank of Pakistan's Asan Mobile Account or AMA. By providing an interoperable USSD channel and for branchless banking, needing no smartphones or internet, the AMA scheme has onboarded over 5.5 million wallets, 44% of which belongs to women alone. AMA has recently been appreciated by World Economic Forum, which is extremely heartening and encouraging, particularly in the context of the subject of today's conference. Furthermore, SBP's licensing and regulatory framework for digital banks, introduced in 2022, facilitates the establishment of exclusive digital banks like Mashriq, which is representing in this conference today, which are expected to offer tailor-made financial products and services that cater to the unique requirement of various customer segments, including SMEs and individuals in remote areas. Overall, digital assumption is dismantling barriers to financial inclusion in Pakistan. This metamorphosis brings more people into formal financial system and drive economic growth, poses an excellent opportunity for digital supply chain finance, or DSSF, as this conference has briefed it, to streamline and enhance financial transactions within supply chain, offering substantial benefits to SMEs. Recognizing this need and potential, the State Bank of Pakistan in June 2024 mandated banks to develop, implement DSCF solutions within 6 months, emphasizing the need for increased SMEs access to digital and financial payments. Partnership between banks, fintechs, and other technology providers can expedite the rollout of DSCF offering, making them accessible to SMEs relatively quickly. And this conference has just come at the right time in this particular context as well. SME in emerging markets, particularly in Asia and Latin America, face longer cash conversion intervals than those in advanced economies, necessitating substantial working capital demands. Several developed and developing countries have made significant strides in digital supply chain financing through proactive banking initiatives and regulatory frameworks. These initiatives considerably benefited in enhancing Tier 2 and Tier 3 SMEs, which were earlier confined to large corporations and their Tier 1 suppliers. We've seen that in Pakistan too, by the way. As you know, there was a pilot which was launched a few years back at the State Bank also in the sugar industry. But that never permeated down to Tier 2 and Tier 3. So with these kind of initiatives, that could go down to Tier 2, Tier 3 as well. A few examples from across the globe. In China, JD.com and Alibaba have provided over $100 billion in financing to SMEs through their digital SCF platforms and reduced financing costs by up to 30%. The Reserve Bank of India introduced the Trade Receivables Discounting System, TREDS, a platform that facilitates financing M and SMEs trade receivables from corporate buyers. Since its initiation in 2017, platforms like TREDS, RXIL, and M1 Exchange have collectively discounted invoices worth over $6 billion in India. In Singapore, Monetary Authority of Singapore, or MAS, has been instrumental in fostering a conducive environment for digital SCF. The Financial Sector Technology and Innovation Scheme introduced by MAS has allocated over Singapore dollar 225 million to support financial innovation, including digital SCF. Yoko in South Africa, launched only in November 2022, provides journal working capital lines to over 150,000 merchants, with a significant portion of repayments being automated through electronic sales only. The National Banking Securities Commission in Mexico has facilitated the integration of fintech solution into traditional banking. Even in Mexico, over $1 billion working capital financing was extended to SME. The similar thing happened in Germany also. I'm skipping that too. But Pakistan, ladies and gentlemen, stand at a unique crossroads with substantial opportunities and challenges in enhancing digital SCF and SME growth. One of Pakistan's unique strengths is its high smartphone penetration and the widespread use of mobile wallets, which can provide microloans based on transaction histories and digital invoicing, reducing the dependency on traditional banking infrastructure and expanding financial inclusion. I'm pleased to report to you, we as the PBA, with SBP Power Division and its Energy Efficient Solution Implementing Entity, NICA, are currently working on introducing end-to-end digital financing solution for replacement of energy efficient fans and at source recovery of loan repayments through electricity bills. This will be a pioneering structure which will be used subsequently for solar panel financing. The finance minister recently mandated PBA to work with SBP to enhance financial inclusion in agriculture and SME sectors, specifically leveraging technology and existing digital platforms. While there are a number of initiatives to be pursued, 49 in total, by the way, by the SBP Steering Committee and the 3 dedicated task forces of priority sectors, that is SME, agriculture, and digital, the top 2 most impactful initiatives cutting across all 3 priority sectors are, number 1 is the development of SME Environment and Performance Index, which was necessitated as the last census of economic establishment was done in 2005, and SMEDA's SME baseline survey was conducted in 2005 by the economic establishments and SMEDA in 2009 based on sample size of merely 1,300 respondents. The proposed SME index will consider not only the business environment, but also capture actual performance figures of SMEs. This data will then be used to develop a digital scorecard for the entire industry to help tap into funding SMEs primarily operating in informal sector. The setup of similar performance index for agriculture sector will immediately follow this. The second one is the setting up of a private equity fund for investment in fintech startups to develop applications and use cases basically to migrate cash-based transactions to digital ones and help reduce currency in circulation, which currently stands in the north of whopping 8.5 trillion rupees, driving financial inclusion and economic growth. We have the successful examples of Zarat, Sprint, and Google Cloud startup competitions are a reference in this space. To enhance digital supply chain finance and SME growth in Pakistan, a multifaceted approach combining regulatory support, technological adoption, cybersecurity, hygiene and awareness, and I want to highlight and emphasize on this, cybersecurity, hygiene and awareness, and strategic partnerships is absolutely essential. A regulatory push jointly from SBP and SECP mandating large corporations going beyond the realm of banking and government agencies to participate in digital SCF ecosystem by ensuring their payables are processed through digital platforms like China, where e-commerce giants like Alibaba have created extensive digital ecosystem to support their supply chain. Investment in digital infrastructure is critical. The government, in collaboration with private sector through my favorite, the private-public partnership mode, should prioritize expanding internet access and improving digital literacy amongst SMEs. This will ensure that even the smallest businesses can participate in digital economy, as seen in the successful models of Singapore and Mexico. Implementing a robust regulatory framework, encouraging and incentivizing innovation while protecting shareholders is crucial while developing innovative SCF solutions. SBP's recent directive vis-à-vis digital SCF solution to be launched within 6 months highlight the urgency and importance of this transformation. Learning from India's success, its goods and services tax network platform, Pakistan could implement a centralized program for invoice registration and tax compliance, facilitating easier access to SCF for SMEs by providing verifiable data on business transactions. The high degree of informal economy activity in Pakistan necessitates innovative approaches to bring unregistered SMEs into the formal financial system. Incentives for formal registration, such as easier access to credit and lower transaction costs, can encourage compliance. We must agitate to the government to consider Nadra as a utility rather than a business entity with the objective of making profits. Unlike as in the case of UPI in India, which only covers its cost for the larger good of digital advocacy and economic prosperity. Collaboration with fintechs and leveraging big data analytics, financial institutions can assess the creditworthiness of SMEs better, particularly in informal businesses, providing a pathway to formalization and growth for the country. Thank you very much for your attention.